truly the real focus right now should be and needs to be on how we are recovering and how we can continue to deal with the ongoing second wave of COVID-19. And there are many ways of looking at that story, many aspects that are crucial. On the one hand is, of course, the medical side of it, the health side of it. And we have been focusing on shortages that we saw a few weeks ago. Those, luckily, at least anecdotally, have eased in most places. But the medical crisis still remains. That is what is leading to extended curbs. What is that doing to the economy? We got a glimpse of how the RBI looks at it today in their annual report, where they talked about the outlook being clouded with the resurgence of the COVID-19 second wave from March of this year, which put quite a dampener on the kind of recovery that we were seeing from September 2020 onwards. The RBI very clearly saying that going forward, areas of concern will include private consumption and the impact on private consumption. Private investment also needs to really be stepped up. Now, how will that happen? What are the factors we need to look at right now? To speak on this, I'm joined by Mythili Bhusnurmath, consulting editor, ET Now. Kaushik Das, chief economist, India, Deutsche Bank Research, joins us on the show, as does Devendra Pant, chief economist of India Ratings and Research. Welcome to all of you, and thank you for speaking with us today. Mythili, let me begin by getting your take from the RBI report today. This is an annual report that they put out, of course, but in the context of the second wave, what was a very clear message from the RBI, and how are they looking at the picture unfolding? Because they talk about the global picture and describe it as grim. What about the Indian context? What are the red flags there?
Well, pretty grim for India too, because as the report clearly says, the macroeconomic costs of this can be limited to Q1 with possible spillovers to July only in the most optimistic scenario. So mind you, the most optimistic scenario says that we're going to have an impact in Q1 which will spill over to July. And it also says that this provides a very limited window to establish strict pandemic protocols and logistics. Most importantly, ramp up the vaccine production and ensure delivery of these vaccines, ensure that you vaccinate the people. So to my mind, the RBI is clearly saying that until you solve the health crisis, you are not going to get anywhere as far as tackling the economic crisis is concerned. So that, to my mind, is the most important message that comes through. And though that they have held that analysts broadly say that the RBI's projection of 10.5% growth for this fiscal remains as of now, it is clearly very, very wary about whether this will really hold if the pandemic continues. And as things stand today, I think this optimistic scenario is clearly a rather unrealistic scenario, because we've not seen any signs of the vaccination program really reaching the kind of momentum that it should reach in order to ensure that the health crisis is, at least if not solved, mitigated. And we have some kind of herd immunity, without which you cannot really expect economic activity to open up in any big way, and hence recovery also to follow.
There was Uday Kotak spoke to a slew of channels and publications yesterday. He spoke with ET Now as well, and some of the very interesting quotes that came up. One of them was that it's time for help from the government. If not now, then when? Kaushik Das, I want you to come in on this. How really are we approaching the situation? Are we sort of waiting for cases to continue to reduce, and then restrictions will ease, and that same kind of pent-up demand, which was looking like leading to a V-shaped recovery, will recur in the next few weeks or maybe months? Is that our plan of action right now, and can we really afford to wait for that kind of a scenario to develop?
Hi, Tamanna. So it's a very fluid situation at this point of time. If you look at the mathematical predictions made by the IIT scientists led by Dr. Vidyasagar, they're saying that by the end of June, we should expect the new cases to come down to as low as 15,000 from just above 200,000 that we have today. Maybe 15,000 is a very low number, but if it comes down below 50,000 by the end of June, as per their predictions, that will be a very turn in positive sentiment as far as at least the new cases are coming down. And you could, kind of heave a sigh of relief that the second wave, the worst of the second wave at least, is behind us. But we know for a fact that the different states which have imposed lockdowns they're probably going to continue till June, and some states may continue till July. The states which were the last to kind of announce lockdowns, like West Bengal, they could continue till July as well. So this is definitely going to spill over into July-September quarter as well. It's not just going to get restricted to April-June, because a lot of damage has been done. Now, when we talk about growth, there is a mechanical element of growth that we are getting in FY22, just because of the low base effect of the last year. If you add -8% decline last year, getting 10.5% growth on the back of that is not a big deal. And actually, it's a very disappointing number. So you have to think in terms of opportunity cost, that if we did not have this vicious second wave, maybe India could have grown at 12, 13, 14% year on year in this year, instead of the 10% or 10.5% and even lower numbers that people are talking about. So my point is that on a mechanical basis, just because the last year was so low, and if you look at all the year-on-year growth figures that we are getting for different macro indicators, those numbers are still pretty robust. In fact, they could have been stronger if not for the second wave. But that is not the way to look at what is happening currently at the Indian economy. You have to look at the sequential momentum from January, March, how much we have slowed down in April, June, and how fast we can recover over the next 2-3 quarters. So I think we have to kind of be cautious about any kind of prediction as far as growth is concerned. RBI has already been proactive and taken steps on 5th May to kind of ensure that the small and medium sector is protected to some extent. They will announce more policies, I'm sure, on 4th June when they meet next. The government probably is already looking through different ways that they can support the economy. But the fiscal deficit is already stretched at 6.8% of GDP. Market borrowings are already high. So they'll have to think whether they can balance this need for supporting growth. They need to do that, but can they have savings from somewhere else so that your overall fiscal deficit doesn't go up too much? And in that regard, RBI giving an extra dividend that people were not expecting of another INR 500 billion, that is pretty helpful at this point of time.
What will be done with this extra dividend is the question, and when should this sort of ace be played is also what we need to look at. But meanwhile, Devendra, Pant, I want to get your view on how you see the economy getting hit, or how you see the impact of the second wave. From parts of what the RBI says, they are suggesting that it's not as bad as the first time round, and that perhaps is because you had a national lockdown then, which put everything on freeze. You don't have a national lockdown this time. There are localized lockdowns, and some things are still moving. Do you think that's enough to give relief to the economy?
Well, Tamanna, it all depends how you want to look at it. If one looks at it the way or where we were last year, one would say, yeah, we are doing great. But as Kaushik also said, and most of the commentators are saying, that 22 is mainly because of base effect. So if I look at the most talked about indicator across the globe as on today is the Google Mobility Index. And from there one looks at your workplace mobility. So if you look at the first quarter till now, say April and almost all of May. So May we are ballpark almost similar to where we were in May 2020, roughly between 50 to 65% down from the base. Major difference is if you look at April number. April last year was almost 100% or almost no workplace mobility, or very minimal. Whereas in April this year, we are relatively better. Now what your news capsule right in the beginning said, like Ministry of Home has given it till end of June. So the growth number looks to be very, very, very difficult to predict as of now, because more than any sort of shocks which economists can model with some extent of error, what we are struggling it right now, even in fact entire of last year and even this year, is the uncertainty. And that uncertainty is coming from the health. Now, those health issues are beyond any economist's control, like what Kaushik said just now, that the forecasts are that by end of June, these numbers will come to 50,000 per day. Most of the epidemiologists were talking about the way it has gone up, the same way it will come down. And exactly that has happened. Like we are closer to nearly half in 15, 20 odd days. Problem here is even COVID, no COVID, pandemic, no pandemic, lockdown, no lockdown. But if I go back and look at it from last, say, FY14 was the last year when we had a nominal GDP growth of 13%. 15 to 18, our nominal GDP growth was in and around 11% mark. 19, it came down to 20, it came down to 7.5, 21 minus 6.5 or so. Now, why I'm stressing for nominal GDP growth? Because if you look at two factors of production, one is supplying investment, another is labor. So your nominal GDP growth or nominal GDP is nothing but sum total of return to labor and return to capital. Now, if you look at this period, your labor wages growth has been slower than your return to capital, and that wages growth has had a bigger impact on the consumption, which we are struggling to revive. Now, what happens is, again,
I want to come to the question of consumption. I would request answers. We kept, comments we kept limited so that we can have a free-flowing discussion and we can get more ideas in. I get your point about consumption, and that is truly the big concern. But I want to take off from what Mr. Pant was saying, that it depends on how you look at it. So compared to April 2020, clearly April 2021 is better in the sense of economic activity. But what are the lessons of last year? Mythili, here is where it comes in. Even if we do see case numbers going down, we will be more cautious this time round to open up. Harking back to what I reported in the beginning of the show, the Ministry of Home Affairs saying, let's keep COVID guidelines till the 30th of June. Every state will be more cautious because they've learnt a lesson after the first wave. And no one will want to repeat it now.
Well, yes, Tamanna, but in this I would fault not only the governments, both centre and the states, but I would also fault the people of India. I mean, many people may not like my saying this, but how many of us have really followed the COVID protocol entirely? You still see people walking around without masks. You still see people crowding around. In fact, when the government did lift restrictions, the crowds in the markets were to be seen to be believed. It's unbelievable. So as long as we do not internalize this, governments as well as the citizens must work together to ensure that not just the second wave, but the third wave also that people are talking about, when it does hit, if and when it does hit, we are able to ensure that economic activity does not completely come to a standstill simply because we're not adhering to the protocols. So there's only that much government can do. But here I would also fault the central government for two things. One, not spending enough, not spending on the right things. The vaccine strategy has clearly fallen short. It is for the central government to negotiate with suppliers all over the world and then ensure the equitable distribution between the states. It is a fact that when states compete with each other, they will not be able to get the best deal. So both on the vaccine front as well as on the government not spending enough, the RBI's annual report clearly shows that despite the talk of fiscal stimulus, the actual increase in spending by the centre was only about 4 lakh crores. Now that is grossly insufficient. This is not a time to stick to things like fiscal deficit, worry about debt. If you see the way the stock market is zoomed, there clearly is liquidity and money in the system. The question is, can you come up with the right kind of instruments where people will contribute to the government's effort of combating the pandemic? If you were to vote pandemic bonds that people have spoken about in the past, if you were to borrow a little bit more, if you were to rationalize expenditure, the government can spend, do income transfers, vaccinate, spend on infrastructure. These are not new things. Why the government is not doing it, I really fail to understand. The Reserve Bank has done enough and more. It is now, ball is clearly in the fisc's court, in the government's court.
You know, the absolutely point taken that people will have to adhere to norms. There is really no way of knowing whether they will or not. It's unlikely that many won't. A lot of people have not yet internalized social distancing, as Mythili pointed out. Kaushik Das, I want to understand where that puts us in terms of being able to minimize the economic impact. We haven't even seen the totality of what is happening in Q1 of this fisc. It's definitely going to hurt in many ways which are yet to pan out. My question is, is there a clear path forward?
So, Tamanna, this is almost impossible to answer. I mean, you know, in economics, there's a complicated field called chaos theory, and chaos theory says that, you know, a little bit of small changes in, you know, the initial starting point can have a complete different path. And, you know, the best example of chaos theory was discussed in the movie Jurassic Park. If you go back and watch that movie. So the bottom line is that we don't know exactly, you know, how this path will play out over the next 9 to 12 months. And that is why what Devendra was talking about, a lot of uncertainty. And definitely we could have a third wave. Normally the third wave or any, the gap between the first and second or second and third wave is normally 6 to 8 months. So it's about 32 to 35 weeks. So if you calculate from the end of June or early July, the third wave should hit you sometime around January, March of next year. So basically, as economists, what we can do is probably take a conservative growth forecast, thinking that, you know, that this is not going to be a straight line of recovery. For 6 months, you'll have to go through intense pain, and then you'll probably see 3-4 months of some kind of relief. And then depending on how people behave, as Mythili mentioned, that we have to keep on learning from our mistakes. The mistakes that we have done in the second wave from, you know, a general kind of not fulfilling the COVID-19 protocols, that the government can't do everything. You can't just go and try to, you know, stop people or punish them. And that's not how the, you know, the thing will work. So people will have to decide on for themselves that if they value their lives or the lives of their near and dear ones, they have to, you know, kind of maintain those protocols. And then you can have a probably, you know, much shallower third wave. And then by that time, in the next 6 months, we have a very narrow window. If we can get at least 35-40% of the population vaccinated with the first dose or second dose to whatever extent we can, starting from maybe boosting in July and August, if the vaccination is kind of drive is boosted, then we should be in a relatively better position. But you have to continuously worry about this thing unless a large part of the population has been vaccinated. And then we can, you know, sigh a heave of relief that we can get back to some kind of normalcy.
So that's of course the trick. That's the billion-dollar question, that how do we ramp up vaccinations? And we're working on that. Hopefully by July, August, you will see higher levels of vaccinations, and we'll have to see how that pans out. But Mr. Pant, I wanted to come to you on the question of consumption. Do we need to now figure out a strategy where we can boost consumption appetite right away? And is now the time to do it?
Yeah, Tamanna, what has happened, like whether we look at last year or you go a couple of years back, it is the moment the consumption started collapsing. Investment was collapsing, but it was the consumption which was holding fort, and we were able to grow at 5 and 6% But the moment consumption, which is roughly around, even after collapse, is 56 or 57% of the GDP, the moment that started collapsing, and we had seen the consumption growth barely growing, first half it's contracting, we are in a situation that we are again coming back to the old term coined by Raj Krishna, Hindu rate of growth, that we are looking at 4% odd or so. So it's the consumption revival which is very important, because unless we have consumption revival now, it is unlikely to have a broad-based investment recovery in the economy. There are certain sectors which will continue to attract more investment, no doubt about it, like your infra, especially if you say the renewable, roads and all those ports, airports, you will continue to have that. But if you're looking at the core infra or the major like FMCG and other products, consumer products and all those, which are already operating at 70 or 75% of the capacity utilization level, it is unlikely that there we'll see the capacity addition. Now, what will happen is, unless we revive this consumption, now whether we do the income transfer, whichever way, we have been able to do it, we are able to do a direct benefit transfer of subsidy, we have been able to give MSP to the farmers this year, directly transferring that money. So it is available. What is required now, a strategy by which this money is directly given. And very important is, this should be more than giving this stimulus. What is required or more important is when to withdraw it. Whether we withdraw it at right time or we let it remain in the system and have the problem which we faced in 2010 or so because of overheating of the economy. So government should provide that stimulus.
Yes, first we must extend it
and withdraw it.
Yes. Yes, this is a discussion which will be ongoing over the next few months as we try and balance the health factors and the economic and livelihood factors. We've come to that stage where we need to start looking at how to revive these livelihoods as well. So I want to thank all of you for joining us on that chat. We'll take a very short break, but